Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities continued their positive momentum as expectations of policy rate easing in the US received a boost from lower than expected inflation and slowing retail sales. Major US equity benchmarks posted weekly gains supported by strong corporate earnings, with the Dow Jones Industrial Average touching a new lifetime high, crossing the 40,000 mark for the first time. Asian equities posted strong gains led by China, Indonesia and Taiwan. The positivity was driven by strong economic data from China, which showed industrial output rose 6.7% year-on-year in April as a recovery in the manufacturing sector gathered pace, pointing to expectations of stronger demand coming ahead. China also followed through with the ultra-long bond issuances to support the economy and announced major steps to stabilize the crisis-hit property sector. Back home, Indian equities trended higher for the second consecutive week. The Nifty index started the week on a positive note and trended higher on 4 out of 5 trading sessions during the week, amid positive global sentiments and strong domestic buying into equities. Broader markets continued their outperformance over large-cap peers, with the Nifty Mid-Cap Index up 4.2%, while Nifty Small-Cap Index was up 4.7% for the week. Among sectors, capital goods, realty and metals led the winners with gains of over 5.5% for the week, while FMCG was the only sector to end in red with a cut of around 0.4% for the week. The Indian fixed income market had another good week, with Indian government bond yields declining across the curve, driven by a sharp decline in US bond yields supported by lower than expected US inflation data and retail sales, while the RBI announced a further purchase of INR 600 billion worth of bonds in the coming week. The yield on 10-year Indian government bond yield fell 4 basis points to close at 7.09%, while the 3-year and 5-year Indian government bond yield fell 4 basis points each respectively. The INR appreciated 0.2% against the USD to close at 83.3 per dollar, tracking gains in domestic equities, lower US bond yields, weaker USD, and a likely intervention by the Reserve Bank of India. INR gold rose 0.4% for the week. Brent crude oil posted a weekly gain as improving economic indicators from US and China boosted demand prospects, while a decline in US crude oil inventories and tightening supply conditions further supported the gain. Among the macro updates for the week, the first was on India's consumer price inflation, which moderated slightly to 4.83% year-on-year in April from 4.85% in the previous month. This was the lowest reading in over 11 months, driven by lower price rises for housing, clothing and footwear, while prices fell faster for fuel and light. On the other hand, inflation rose for food and beverages. On a sequential basis, consumer prices rose nearly 0.5% month-on-month. Second data was on India's trade deficit, which widened to 19.1 billion in April 2024, sharply higher from the 11-month low of USD 15.6 billion last month and above market consensus of USD 17.2 billion. Imports rose at a faster pace, up 10.3% year-on-year to USD 57.3 billion, driven largely due to higher import bills for gold amid its soaring prices, petroleum products and electronics. In the meantime, exports increased by a softer 1.1% year-on-year to USD 35 billion, with sharp increases noted for electronics and chemicals. The final data was on India's wholesale price inflation, which rose 1.3% year-on-year in April 2024 from a 0.53% rise recorded in the previous month and above market estimates of a 1% gain. It marked the 6th consecutive period of wholesale inflation and the fastest pace since March 2023, due to a faster rise in food and primary articles amid a rebound in fuel prices and softer falls in manufacturing prices. Meanwhile, fuel and power prices rebounded amid softer decline in LPG, HSD and petrol. However, manufacturing prices declined less, weighed down by basic metals, chemical and chemical products and textiles. On a monthly basis, wholesale prices were up 0.79%, following a 0.4% gain in the month of March.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.